Okay, well, Jake, Patrick, thanks very much for joining today, and obviously off the back of a very interesting panel discussion about a half hour ago. I guess to start things off and just to set the scene for the conversation, you're both obviously currently co-leads of the UN-Convened Net Zero Asset Owners Alliance. Do you want to just maybe share how you came to work together when you met, sort of what that journey was to the formation of the alliance, and just take it from there maybe?
Sure, so maybe I'll start with the formation of the alliance. So first off, Jake and I lead the engagement track, and the alliance itself has multiple tracks of work, and engagement is one of the key critical ones. So there's also work tracks around allocation, there's work tracks around policy and communications and funding the transition. But the Asset Owner Alliance was established in 2019, September, where at the time a small group of asset owners, just a handful, wanted to make the commitment to net zero in line with 1.5 in order to help induce the world that we need to achieve in order to keep our businesses thriving. So if you think of that from an investment point of view as well as an insurance point of view, if we want good returns in the long term, we need to address climate change. And if we want the insurance business to continue to thrive where it won't in a hot world, so it faces many kind of uphill battles in a hotter and hotter climate, then we need to address climate change in the real economy. So these asset owners came together and said, hey, this is a common risk across our industry, and we need to have our voices working together to signal solutions to address climate change. Mm-hmm. And then maybe, Jake, you could talk about how we started the engagement track.
Yeah. So Westpath came in a little bit after that initial founding in April of 2020. And as we got involved, what we were finding a longstanding commitment of Westpath is just that engagement is one of the key aspects of what we seek to invest in from a theory of change perspective in bringing about a sustainable global economy across all issues. And so we were already committed to getting involved in the engagement track when we first joined the alliance, and then in getting involved, Patrick at the time was running the asset manager engagement sub-track of the alliance, and we were also very curious about that. So Patrick and I started working together. We became co-leads of that sub-track of the asset manager discussion, and then the alliance made a strategic decision that one of the roles of what we could do really well as asset owner voices is engage with managers. So that role of asset manager engagement became more and more of an important aspect of what we thought about, and Patrick and I also started having more systemic conversations about what is the bigger picture of what we're trying to do in helping to support a transition to net zero. So we became co-leads of the track and also good friends. He was kind enough to have me crash at his place in Munich last week. So it's really been a productive collaboration from our perspective at Westpath.
Brilliant. And so I guess just elaborating on that and again setting the tone for further questions, what are the financial risks that climate change poses to investment portfolios? Jake, maybe you can speak to the pension fund side, and Patrick, you can obviously speak to insurance.
Yeah, so at Westpath we have something that's called the Sustainable Economy Framework, and it's a pretty simple idea that we need to see and support a transition to a sustainable global economy in order to achieve the financial returns that our participants and institutional investors are reliant upon. We define a sustainable global economy as one that promotes social cohesion, long-term prosperity for all, and most relevant to our conversation today, environmental health. So it's about the return profile that we think is really necessary from a market perspective, which is ultimately one of the most key drivers of whether we're able to meet the financial goals of our participants.
Yeah, and on the insurance side, maybe I won't speak on behalf of Allianz, but I'll speak to what I've heard from the other asset owners within the Asset Owner Alliance. And that is there's kind of three categories of risk for why we need to be addressing climate change. There's the investment risk. With a declining market across the board, asset managers could still outperform benchmark, but asset owners will follow that down the whole way. But then you could also look at the social side and you could look at the insurance side. So the social side, when it comes to inequality or mass migrations, poses a really big problem for insurance companies. It disrupts the fabric of a stable society. So imagine the hundreds of millions of climate migrants that could happen in a hot world and what that would mean for the insurance business and the disruption that it would cause. Now, thinking about it also from the insurance side, more unpredictable events is really difficult on our business, to the point where there's the risk that we can't insure certain areas or certain activities, but also the stronger events, so natural catastrophes. Those lead to higher and higher payouts that really stress our business. So I would say that the asset owners that are insurance-based within the Alliance see the whole investment and asset manager side, the social side, and the insurance side as kind of a triple force to really drive and incentivize us to address this climate risk in the real economy.
Brilliant. And I think, obviously, elaborating on the panel that you both just sat on, I want to sort of draw on a paper that you both published earlier in the year, obviously in your roles as co-leads of the UN-Convened Net Zero Asset Owners Alliance. And again, I'm just going to quote here in the paper, you note examples of when corporate engagement becomes less effective, particularly in hard-to-abate sectors like the oil and gas sector. And I guess my question to you would be, what are the limitations of corporate engagement, and what more needs to be done to achieve and accelerate real economy decarbonisation?
Yeah, so let me talk through just a few of the limits, and then I'll talk through the solutions. So one is just that corporate engagement is very resource intensive. So it takes a lot to have a productive corporate engagement whereby we as an investor are researching about the company, are coming in with a thoughtful theory of change, are ready to build relationships over the long term for a long-term engagement that we hope is going to yield positive results. So we at Westpath hold approximately 5,000 equities in our portfolio. Multiple thousands is certainly probably the norm in the Asset Owner Alliance, and it's not realistic or practical to think we can have productive engagements with all of those companies. It's also another term that we used in the paper is squeezing the balloon of climate risk. So if I convince a company to get out of a certain operation, let's say an oil and gas field that might be particularly dirty, if they sell that to another operator, especially an operator that might not be running that asset as efficiently, we haven't reduced the systemic climate risk. We might have actually increased it accidentally. And then lastly, there's only so far we can reasonably ask companies to go in how they are individually seeking to decarbonize if they are moving beyond what the political and economic boundaries are of where there's practical action to be taken. So if the economic system is not aligned with 1.5 degrees, we can't reasonably ask a company to go there. Now, what are the solutions to some of those aspects? On the sectoral side, we think that there's rooms to have more productive group conversations with companies, like bringing the oil and gas sector together to talk through what are standards, so that we're not having to have those piecemeal one-by-one conversations as investors. We also think that there's a lot of productive ground for investors to make our perspective known in public discourse and policy. So regulation is one of the things that can help create a floor by which if one producer divests of an asset, it's not having really poor climate record if that's being regulated by some sort of third-party government entity. So those are some of the examples where we see an opportunity to just elevate the scale at which this question is happening, because ultimately the transition needs to be thought of in a systemic way to be effective, and so we need to develop as investors more systemic tools for prompting the transition. And Patrick has led up a lot of the work, as I said before, founding the asset manager engagement track. So that's one other piece that we think is particularly important in what the Alliance is doing.
Yeah, so maybe it's worth just delving into that a little bit. And probably there's some very strong white papers out there focusing on the role that asset managers need to be doing to look after the interests and who they're representing, the asset owner. And so if we want asset managers to be representing our long-term interests, of course, the very basic thing we need to do is make sure that they know what our interests are and how they should be representing it. But it seems like that conviction of needing to do it hasn't led to actual action of asset owners really pressing on asset managers for topics on how they should be engaging companies on their stewardship, how they should be using their public voice, and how they should be also pushing for this real world change. So when it comes to the asset manager engagement, it's pulling together asset owners from across the Alliance to approach asset managers together on a variety of topics. It could be their stewardship approach, which includes their public messaging and their proxy voting. It could be their engagement approach to companies, and it also could be their focus on lobbying. And so together, it's extremely important that asset owners think about what are our individual interests and how do we individually address those interests to asset managers. And I think it's a really important focus point for the Asset Owner Alliance as the unique nature of having all asset owners in one area as the key customers to the world's largest asset managers out there.
Sure. And I think then maybe my last question to you would be around actually promoting the opportunity that exists within this, I guess, transition pathway. I think some stats that were thrown around on the panel were 14% of global suppliers, it comes from the majors, but the rest comes from private government bodies, whatever, NOCs, you name it. And those bodies are far harder to engage with. So I guess my question to you would be, what is the role that the oil and gas sector has to play, leveraging the financial capabilities that it has, leveraging the technical capabilities that it has to achieving this, I guess, decarbonisation of the energy mix, but the economy more broadly? And then how do you get these traditional old school actors on board, if you like, with that opportunity that exists and get them excited and behind that drive rather than it being two different parties coming together and clashing heads, if you like?
Yeah, I think understanding the interests and why we're doing this in the first place is quite useful. Today we heard a lot of talk from oil and gas companies about why finance is kind of leaving the area and why it's hard to fundraise. And we heard it's because of protesters out there. But the message that we just delivered on the panel and that we're talking about now is, no, we're focused on decarbonization because it's core to our business. It is not a competitive advantage, it's a competitive necessity for us to be addressing this. So oil and gas companies first should be understanding why investors are pushing the way they are pushing, but also they need to be operating with excellence across the board on emissions. So we've heard about methane, but also when it comes to their scope 1 and 2 emissions for all greenhouse gases, it needs to be getting to zero. It's very clear. And those ones that are operating the best will have the best opportunities to attract capital in the long run. We also think that they need to be setting the net zero ambition and following up with targets, but it's very clear that they need to be the best in their sector if they want to attract money of investors.
And I would just add to that the oil and gas global sector is obviously very interconnected. So even that 14% might have a lot of relationships with the 86% in terms of joint partnerships and equity operations. And so the innovation on areas like low carbon transition, whether it's running your wells more efficiently or developing out effective carbon capture and sequestration, that doesn't need to stay with the 14%. But I think we do need the 14% to help set the pace of what innovation and strong transition looks like. And then investors need to continue to think of innovative ways to engage the 86%. It might, for example, not be in a traditional mechanism of having a direct corporate-to-corporate dialogue, but we're increasingly hearing in the investor community good work being done on engaging sovereigns and sovereign funds who can help set the pace at that aggregate level of what's needed for a transition that then might filter through to the rest of the country, including the oil and gas markets. So you need to be thoughtful and practical, but there are important steps that the oil and gas company sector should be taking. One of the importance of which is making sure that they have this holistic vision of what they look like to be successful in a transitioning world, and then that they're backing it up in all parts of their business, including how they're engaging in conversations like lobbying and public discourse.
Well, Patrick, again, there's a million questions I could ask off the back of that, but I'm mindful of time, so we'll wrap it up there. But thanks very much for your time.
Thank you.
Good speaking to you today.
Thank you.